Okay. What? No, motherfucker. Damn. Okay.
Yeah, they're going to try to cancel Bill Maher after this one. It matters that the mayor stands by someone who says things like, if you don't believe in the government's sacred right to seize private property, it's over. Seize private property. Home ownership is racist. Elect more communists. Private property, especially home ownership, is a weapon of white supremacy. Democrats seem to be having this debate whether or not Mayor Mamdani is a socialist or a democratic socialist. Let me settle it. He's a straight-up communist. Yeah, they're going to try to cancel Bill Maher after this one.
Come on. Go live. And what do we got here? Ooh, give me a second. Just getting ready. Just getting started. All right, there we go. Okay, give me a second. Just getting warmed up. Who do we have tonight? All right, that is not a good thing. Well, and there we go. All right, live. And we're waiting for this one right here to turn on. That one should turn on very shortly. Let's get this thing back to where it belongs. And I believe we are ready to roll. Good evening, everyone. All right, Aaron, Jake, Memo. Okay, Steve, Butch, Lion Keeper, VJ, Jeremiah, Rick, Pied Piper, Running Gold, back again, Den, Sean, Steve, Jeremiah, good evening. Okay, thank you. Tina, good evening, Tina. Eric, Beto, Scooter, Mark, Eric. Oh, Lumotion, cool means. DeWitt, Jen, Strong Vision, Bay Girl, Aliki, Jeremiah, Scooter, Den, Nero Shah, Scooter, Mike, Ignacio, Chad, looking around, Tina, looking around, Tom, James Thomas, Cousin Astra, what's happening, brother? Dan, Brody, Scooter, Freckled Queen, good evening again, young lady. Marty, thank you, you're welcome. Puppet, Puppet Whisperer. Okay, Ira, good evening. Six Fingers, Tina. Second best dad hacks. Okay, Real Deal, Mom Boss, Jeff, Juan, whatever. Norma, Gail, sorry. John, Karan, Mrs. Alabama 10. Jordan, D Nice, Kaylee, D Nice. Fortuno, okay. Tony, Jordan, Kaya, Pawpaw's in the house. Sean D, good evening. Up, down, trader, how are you doing? You're here this time. Okay. Alrighty, so we got this one up and ready to roll. All right, this one's ready to roll, so maybe we can switch over to this phone. Okay, and here we go, and there we go. And do this one more time. Let's see how it works. Paw, John, Todd. I'm almost all set up. Billy Bob. Hey, from Ireland. RCB Milady. Alrighty. And we're getting ready for this. Dividend stock. Dividends. Okay, there we go. No, it's not made for children. And we are live again. Yet again. So we have 1, 2, 3, 4, 5, 6, 7, 8. And we got 3 more on the backside. So, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Yep. Auto, Lightning, T8, Marsco, Scooter, Shawnee Pops, Mercy. John Bahay, good evening from Michigan. Cold here tonight. Sorry, brother. I was outside yesterday with no shirt on. Not so today. Scott Miller, Buckeye. Alrighty. Steve-O. Alright, so, like I said, my name's James. This is Dividend Stock Talk. What we're looking here is invest in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent. We did all that already. That being said, I got 5 criteria. Nope, sorry. I got 5 rules. Rule number 1. Betty, how you doing? Rule number 1. Never buy something you do not want to own long term. Because stocks go up, stocks go down. You just might have to own it for a long period of time. It's just part of the game. Rule number 2. Never sell for a loss. It defeats the purpose of the game. And it is a game. It's an adult game, and it has adult consequences, which means you can lose money if you don't pay attention to what you're doing. I have found in the past, most people lose money by hitting the wrong button. I'm guilty of it myself. I've done it many a times, hit the wrong button. It just happens. It's one of those things. Maykill, T-Dollar, Stats Juggler, Estuado, Mike in Love. Oh, Mike, that's so lovely. As DS Sad Fry. Okay. VJ Jaggers, Bella, Blockchain Buzzed. Cool. Ginger, Michelle, it's my time. Oh, I'm going to agree with you there. Live in Paradise. Or is it Live in Paradise or Live in Paradise? The same, spelled the same way. K-Van, Scooter, 60 Guy. Okay. That being said, I can't hear you. Uh-oh. You might need to go to a different channel because we have 6 or 7 different channels. I don't know what's going on with this one. The microphone seems to be proper. All right, it's up to the tilt. You know, it won't go any higher. All right, I Love Stonks, back again. Ken Porter, how you doing? Meat Baron. Uh-oh. Moses wants to take a look at SDY. Moses, hold tight for a second. Let me get you the criteria, okay, what I'm looking for. Number 1, never buy something you don't want to hold long term. Number 2, never sell for a loss. Number 3, make sure the company's consistently profitable. Rule 4, weekly options only. So if you follow rule 1, then you know anything you suggest has to have weekly options. And rule number 5, make sure all the numbers work. Lonnie, I'll check that one out also. Just sit tight. So we're going to take a look at whatever you guys suggest. You're going to give me stocks. I'm going to pull them up. I'm going to take a look at them, and I'm going to show you exactly what I do to gain that 1% every single week. Okay? That being said, let's get the ball rolling and let's keep on moving. First one on the list today, Moses wants SDY. All right, let's pull it up. SDY. Whoops. SDY. Hell no. Moses, weren't you listening to me? Rule 4, weekly options only. I don't do monthlies. They just don't work for me. So I don't even want to waste my time with monthlies because you only get paid once a month, and that's only 12 to 24% a year. If you like 12 to 24% a year, fine. It's not what I want to do. I want weekly cash flow, not monthly. Okay, I'm retired. I got no problem getting a paycheck every week. VJ, UNH. Okay. Now, see, I don't mind UNH except for what happened today. Let's zoom into that and take a quick look. Okay, take a look at the last 30 days, VJ. She shot up, pulled back. So here's your 30-day bottom right there. Okay, she shoots up, pulls back, shoots up again, and now it's starting another pullback. You get a 30-day bottom, and you get a nice run up. Of course, there's going to be profit taken. And when you get profit taken, the stocks drop. Okay? What's rule number 1? Never buy something you do not want to own long term. Now, long term could be different for everyone. Me, it's 30 days. Okay, you, it might be 5 years, 10 years, 20 years, 40 years. I don't know. But never buy something you're not willing to hold long term. That being said, who do we have over here? Up, downs over here. Emily, Dylan. Good evening, good evening, good evening. Neo, ex-visionary. What do you mean by weekly options? Uh-oh. Newbie alert. Ding, 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 ding. Newbie alert. What do I mean by weekly options? An option is basically the right to buy a stock, but not the obligation. You have two opportunities. An option that expires on a weekly basis or an option that expires on a monthly basis. But just do the math. Monthly, you can only do it once a month, which means I get 12 to 24% return by the end of the year. That doesn't work for me. A weekly option, that's every 7 days. Well, 1% for each option trade, that's 50% per year if you do it right. So ex-visionary, check this out. 30 January, that's this coming Friday. 6 February, that's next Friday. 13 February, 2 Fridays away. 20 February, 3 Fridays away. 27 February, 4 Fridays away. 5 Fridays, 6, 7, 8, so on and so forth. Every single week. Monthly would look something like this. Okay, February, March, June, September, December means I can do it once a month. So if I'm getting 1 to 2% every single option trade that I do, well, that's only 12 to 24% by the end of the year, if you like monthlies. But hold on a second. It's not just that. Okay, 30 days. That would be the 26, right there. All right, ex-visionary. Check this out. This right here is 30 days. 30 days ago, we were at 56.50. Shoots up to 57, drops down to 56, shoots up to 58, drops down to 57, shoots up to 62, drops down to 60. Great. Now tell me where it's going to be in 30 days. That is 30 days. So great. Tell me where it's going to be for the next 30 days. It's not that easy. Okay, because why would I know if it was 56 30 days ago that it would be 60 this week? It's not that easy. Weekly options aren't that difficult because you tell me 5 days from today, well, yeah, this thing should be around here somewhere in 5 days. It gives me a better idea. 5 days is easier than 30 days. It just doesn't make sense. And then I got to sit and watch it for 30 days to make sure. No, I just don't do monthlies. They just don't work for me. It's a simple strategy created for my 9-year-old daughter. Simple, safe, predictable, consistent, no way to lose. That was for my 9-year-old. All right, so what else do we have here? Dylan. Okay, cool. Okay, Stazer Benwell. Interesting name. Neon, good evening. Uh-oh, Moses wants to take a look at the cues. Hey, Moses, weren't you paying attention, brother? Now, I'm having an issue with my computer, which means I need a new computer. But here's the thing. I got a new computer, but it only has 2 USB ports. And I need 4 USB ports to run my show properly. So I got a new computer with 2 ports. That means I can't do it properly. Or the old computer with 4 ports means I can do it properly, but I'm limited on the access that I have. Yeah, I know. It's time for a new computer with 4 or 5 ports, if they still make them. Anyway, the Majestic Mongols. All right, Raymond Dean. The Majestic Muggles? Muggles? Is that Muggles or Muggles? I have no idea. All right, Tesla, TSLA. TSLA. Now, you are aware that Tesla does not have any dividends, which means they do not share their profits. So what I'm looking for, remember I told you, make sure the company's consistently profitable, rule number 3. Well, the way I look at profits, you get 2 opportunities here. 1, I can look at 20 years worth of quarterly reports and annual reports. There's nothing wrong with that, and it's a good idea for those of you who like to read and like to jump into that kind of stuff. But I'm a lazy trader. I really am. I should rebook on your site? Absolutely. Sorry, you missed my call on Friday. Never sell at a loss. Yep. Oh, wait a minute. We get some questions down here. Sorry. What's rule number 1? Got that one? Rule number 1. Never buy what you don't understand. You don't want to hold long term. Who came up with that one? Nice question and concern. Nice answer. Something like I would have said. All righty. Okay. So I forgot where I was. Oh, Tesla. Okay. Now, when I say 20 years of profits, you can look at the quarterly reports, the annual reports, or you can go directly to the dividends. Now, the dividend, if you didn't understand or you were misinformed, the dividend is a portion of the company's profits that they give back to the investors. I don't know if anyone told you, but that's us. Okay, we're buying, we're selling, we want to make money. That's why we're here. We want to take whatever money we have and try to make more. If you're here looking to hit a home run and looking to jump onto the next thing that's going to skyrocket, you are in the wrong place. I don't want you wasting your time, and I certainly don't want you wasting my time. What I'm looking for is a simple, safe 1% per week. Slow growth, steady growth. Okay? It's kind of like the turtle in the hare. The turtle is fast, gets there really quickly, but the turtle always wins the race because it's slow, methodical, thought out, well planned. Well, that's what we're doing here. Simple. What's that? Minnow? Thank you. I didn't quite read that enough, but thank you for that. But that's what I'm looking for. A very slow, consistent, predictable growth. Your volume is bad. I'm terribly sorry. I don't know what to tell you. Okay, we got 9 different channels. Just so happens that this channel is not working quite right. All right, MGA, Everett Fleming, Herbie, Kevi, Ovidio, Castro, Fred Smith, Milton, Flying Squirrel. Anyway, so we're looking for profits and looking for very slow, predictable, and consistent profits. Okay, take your time. We're not in a hurry. If you're looking for capital growth, if you're looking for this thing to shoot to the moon, you're in the wrong place. This is slow. This is boring, monotonous, same thing over and over and over again. Next, Colin wants to take a look at Target. Now, I love Target. Target is a dividend king. If you don't know what a dividend king is, it is a company. Uh-oh. Hold on. Okay, we're on Target right there. Okay, a dividend king is a company that has consistently been profitable for at least 5 decades. John Bohe, how much money in our account should we have in a brokerage account to start this program? Okay, John, you can start it with anything. Okay, now I can't tell you what to do, and I'm not going to tell you what to do because I have no idea who you are, what you stand for, your risk factors, what your age is, what kind of money you have, what kind of education you have. I know absolutely nothing about you, John. Okay, all I can tell you is I started out with $12,500 30 years ago. I took out a second mortgage on my house. The wife was pissed. Okay, no longer my wife. It's an ex-wife. Anyway, I'm a challenge to live with. I am. I'm what you call, hold on. One of my ex-girlfriends told me this once. James, you are an acquired taste. I guess any guy is, I suppose. Okay, so anyway, John, this year we are supposed to start a new trading, a new not a new platform, a new channel with my 5-year-old grandson. He's 5 years old, and only thing he makes on a monthly basis or weekly basis is spare change. That's it. He doesn't get no allowance, anything like that. Just some spare change from the grandparents and from the parents. Maybe with $5 or $6 a week, if he's lucky. So he's going to start out with $50, and we're going to do walk through one step at a time, and my 5-year-old grandson is probably going to be the host. And he will show you, for a 5-year-old, how to do it. Okay? 410 transportation. Okay, I believe I understand your point now. Cool beans. Thank you for that. Okay, so anyway, John, what you start out with has nothing to do with it. The main objection should be, or the main object should be consistency. Okay, it's not timing the market, it's time in the market. Stocks go up, stocks go down, stocks go up, stocks go down. But if you look at the overall stock market from 1900 to where we are today, it averaged 10% per year for over 100 years. That's the average for the last 100 years. It goes up, it pulls back. It goes up, it pulls back. We have a crash, a recession, a pullback, a correction, whatever you want to call it, every decade. Sometimes twice a decade. Stock market goes up, and then it crashes. And then it goes up, and then it crashes. But overall, since 1900, it has averaged a 10% year-over-year growth. All right, so if you do it right, if you find a trading strategy that works for you, if you find something that you believe in, okay, what I do, I know a lot of stuff, but I only share and give away one because it's the most successful and the most predictable. Granted, it's boring as hell. It is. Who wants to invest and spend the time to make 1%? Well, 1% of what? 1% of $100 is $1. 1% of $1 million is 10,000. Can you imagine 1% every single week? That's a 50% return by the end of the year. And I'm terribly sorry, but it is going to take some time and some effort. It means you're going to have to actually do something. Oh, imagine that. Actually have to do something to earn money. Okay, so you get up in the morning, you brush your teeth, you shower, you shave, you get ready for work, sit in front of your computer 5 or 10 minutes. What did I buy? What did I sell? Where's it at? Where does it look like it's going? What should I do next? These are all very important questions. 5 to 10 minutes a day, that's all it is. It's not really that big a deal. Okay, Bristol Myers Squibb, what did I buy it for? What did I sell against it? Okay, where does it look like it's going next? Let's pull it up for now. Aaron, BMY. Wait a minute, we're on target. We're going to say no to target this week just because the bottom's here, she shoots up, pulls back. But look at the whole picture. Okay, when I'm looking at a chart, I always look at the 1-year chart first. What am I looking for? I'm looking for 5 things. Now, you can look at the chart for hours upon hours upon hours and see all the little intricate moves. What I'm looking for is the big picture. I don't need the definition. I don't need to look at every single... No, I don't. I'm looking for 5 things, and it takes 3 to 4 seconds to 5 all 5. It's like, where's Waldo? Where's Waldo? Where in the world is Carmen Sandiego? Do you remember that? Okay, so the 5 things I'm looking for. You ready? Number 1, where's the high? Number 2, where's the low? Number 3, where was it a year ago? Number 4, where is it now? And 5, what's the motion of the ocean? The trail through the woods, the bend around the river, whatever analogy you want to use, where's it going? Where's it moving? Down, up, down, up, down. It takes 3 to 4 seconds to see that. Now, I'm saying no this week because of this right here. Let's zoom in and see if you get a better view of it. Okay. So the better view would look something like this. High, low, where was it? Where is it? Look at the motion. Down, up, down. I don't need any more explanation because the bottom is here, shoots up nicely. Thank you for the ride, but now it's pulling back. You know what I call that? Some people call it retracement. Some people call it a correction. I call it profit taking because think about it. Seriously, think about it. The stock's here at 84 bucks. Okay, 2 months later, it's at 112. 84 to 112 is 38 bucks. That's a $38 move on an $84 stock. Just shy, let's write it on 40%. It's about a 40% move. So ask yourself the question, if you bought something and in 2 months it jumped up 40%, would you take the profit? I know I would. There's probably about half of you people in the audience that would probably take that profit. Well, what the hell do you think? Bottom, shoots up, profit taking. If you like the company, fine. Wait for it to be done. Because guess what happens after profit taking? It comes down, finds a new bottom, turns around, goes back up again. Because contrary to popular belief, stocks do two things and only two things. So if you're sitting patiently waiting for your Ford stock, General Motors, IBM, Kroger, whatever you bought, if you're waiting for that stock to come to your house and take your dog for a walk, wash the dishes, make the bed, dump the trash, rake the yard, ain't gonna happen. Stocks go up, stocks go down, that's it, that's all. Okay? Bottom, you cannot argue at the bottom, it is what it is. From there, she shoots up, now she's coming back down again. I call it profiting. You could call it retracement. You could call it pullback. You can call it whatever you want. I like to call it profit taking because my mind is on profits. That's all I think about. 1% every single week. All right. Know the target. What are we going to do next? Bristol Myers Squibb. Oh, wait a minute. Majestic Moguls wants to take a look at Tesla. TSLA. Now, we already said we're not going to do Tesla because it doesn't have any dividends. TSLA. Okay, but here's the thing about Tesla. You can't escape the man. No matter where you look, no matter where you go, he's up to something. He's up to something that's going to disrupt the world. And it's exactly what he's doing. He came out with a halfway decent electric car. Then he perfected that. Now he's mass producing it. What did he do next? Telecommunications, solar, robotics, tunneling. Now he's coming up with the phone. He's just interrupted. You can't escape it. But here's the thing. He doesn't offer profits. So how? Because we can't escape it, so we might as well join it. Can't escape it, so how do we do it? Okay, how am I going to do Tesla predictably? Okay, now some of you may or may not have heard this is called a seasonality chart. Now let me briefly explain what a seasonality chart is. Okay, the chart you're looking at, all the way to the left, January 1st. All the way to the right, December 31st. This blue line right up here, that represents the movement this year. The red line, down, sideways, up, down, up, that represents an average of the last 10 years. That's where they take 2006, 2007, 2008, 9, 10, 11, so on and so forth. For the last 10 years. 2016, 2017, 2008. The last 10 years, the average movement. So this time of the year goes a little bit sideways before she bottoms out in the first quarter. Okay, so sideways and then down the first quarter, then towards the end of middle of March, she shoots up and goes sideways into June, then goes up. So I'm going to be watching that. The seasonality tells me when does Tesla predictably move. Then I'll take a better look at it. That being said, I try to stay away from companies that don't have dividends, but certain companies you just can't ignore. Tesla is one of them. All right, so back to where we were. So let's go to the next one. We're not going to do Tesla's. Okay. 2 months ago, we're at 380, shoot up to 500, pull back, back up, back down, back up, back down. It's kind of going sideways, no real direction. no real path. No path to the golden land or whatever you want, the promised land. There's no path to the promised land. Down, up, down, up, down. Yeah, it's kind of like all over the place. So I like predictability. Now a move like this, I jump on. Move like that, I jump on, depending on what I want to do. Okay. Someone needs do some new ones to NASDAQ. Okay. What about Intel? We'll take a look at Intel in a second. But Aaron wanted to take a look at Bristol Myers Squibb. All right, let's go up here. Randy Johnson, Kurjo, Sahata. Okay. Andrew Russo, good evening. Passport, how are you? Munchie. Lucifer, back again, I see. Mayor is in Canada. How's that cold weather out there doing? You left the door open, didn't you? Blew it right down here. We barely can hear your sound, very static. Where else can we watch the stream? Okay, so you guys here on this channel. Now, I got 9 different channels. Okay, so I'm going to point. Ready? Here it comes. Right there. So if I'm not pointing directly at you, I'm not pointing directly at you. Okay, so this channel right here. Okay, it is a YouTube channel. We have 4 YouTube channels, 2 TikTok channels, Zoom. No, it's that freaking little blue bird. Twitter, that's the one. X, Twitter, same thing. Rumble, LinkedIn, a lot of different places. But this channel here, we should probably just get rid of this camera because it just keeps. So I'd get rid of it, but it has very important information on it. That's why I don't get rid of it. All right, next. Ovidio Castro wants to take a look at Harley Davidson. Ooh, I like me some Harley, and I actually have some. We're going to take a look at that in a second. Aaron wants to take a look at Bristol Myers Squibb, BMY. Now, BMY is a dividend king. That means I'm not going to tell you what you should or should not have on your portfolio, but Bristol Myers Squibb's over 100 years old, and they have 5 decades of consistent profits. That means they made more money last year than they did the year before. They made more money the year before than they did the year before. So 5 decades, that's 10, 20, 30, 40, 50 years of consistent profits. You cannot get to be a dividend king unless you are consistently profitable. Now, it should be on your list, but I'm not going to tell you that. I'm just saying it should because it's a company that is consistently profitable and they have weekly options. So remember rule 1, never buy something you do not want to own. So if you don't know anything about it, research, research, research. Go to Google. In the Google search, Dividend Kings List 2026. It'll give you the whole list of all the companies that have been consistently profitable for 5 decades. So let's take a look. We got, I'll get this figured out one of these days. We got the high of the year, the low of the year. Where was it a year ago? Where is it now? Look at this. Down, up, down, sideways, down, up, down. Okay. I like it. Let's take a look at the numbers. The numbers, remember, rule number 5, make sure all the numbers work in your favor. Well, here we go. You ready? First number, 5460, 5460, 5460, 5460. What do you think? The current price is 5460. All right, so if I'm buying it at 5460, I want to sell either the 54s or the 55s. Now, I more or less go with the 54 because it's a safer trade, and I'm all for safety. The 54 is selling for 81 cents. Uh-oh, no. After hours. Okay, we're after hours. Right there, this number here, 54.98. So we'll be looking at the 55. The 55 is only offering 31 to 52, not 1%. It's a dividend king. 5 decades of consistent profits. Does it really need to offer us 1%? No. And you will find that with a lot of the really big companies. Johnson & Johnson, Coca-Cola, Heinz Ketchup. Great companies, they don't need our business. So are they offering us 1%? No. He's offering us 31 cents on 55. What is that? 6.65? That's over 0.5%. So what does that come to at the end of the year? 30% at the end of the year? Think about it. Company over 100 years old, 5 decades of consistent profits. You buy it for 54.98. You sell it for 55. You bring in 0.75% for this week. Next week it might be 0.5%. But even 0.5% still comes out to 26% per year. When's the last time you ever got 26% with a safe company? Could you know how much crap we have seen in the last 100 years? World War I, World War II, Korea, Vietnam, the Gulf, all that crap that happened there. We've seen the embargo in the 70s when oil went through the roof. What else did we see? The stock market crashes. 29, 87, 2000, 2008, 2021, 2025. And still, this company is still profitable, still giving out dividends to their investors. Even though it's 0.5% or 0.75%, it still sounds good. I'm sharing you. You're talking my language. All righty. Let's see what you're talking about. Thank you there, Ken. Was it Kenton? Kenton, same thing. Anyway, so let's find out. Okay, BMY, Bristol Myers Squibb. Let's do the 55s. Let's get this out of the way. First thing I want to do is I want to change this from single to covered. Now, you may or may not know what all these are right here. These are all the different trading strategies. You think you can just buy and sell? No, there's a whole bunch of them. You ready? Here we go. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, butterfly, condor, iron condor, vertical roll, collar, double diagonal, unbalanced, deep and wide. Those are all the different option trading strategies. Now, an option is just kind of like an extra little tidbit that gives us a little bit more leverage. Where else can we see it? Your audio is humming. I'm sorry you're having issues there. What I'm going to do is I'm going to turn that camera off. You can pick it up on one of the other channels. Okay, there's 9 different channels that we're streaming on. Okay, I'm sorry that this one's not working properly. Anyway. We can't hear you. You can't hear me down here either? Okay. Keep going. The audio is humming. Thank you. All right. No audio problems for me. Okay, well, you're on a different YouTube channel. Okay, remember, I got 4 different YouTube channels going at the moment. Okay. How is that possible? Well, it's easy. I got 3 different iPhones, and I get an OBS camera on my computer. Anyway, so Bristol Myers Squibb. Let's do it at 55. All right, we're going to do the covered call. Because remember when I said simple, safe, predictable, consistent? Well, the simplest trading strategy is just buying. That's it. That is the simplest trading strategy. We can see you talking, but no sound. All right, Seven Hills, brother, I don't know what to tell you. The volume's turned up all the way. Okay, the microphone's working properly. Okay, now my son Jacob's coming up next month. Next month he's going to come in and he's going to work with me full time. So I've been doing this for a long time. But at this moment in time, I can actually afford to hire my son to come full time. He gave his notice on his job, so he's coming full time, and he's going to take care of everything because he knows a lot more than I do about the computers and stuff. Okay, hold on. James, would you consider being a guest on the next Wealth 365 Summit? Your work can help a lot of people. Hey, Doug, thank you for the invite. Sure, I'll be up for it. No problem for me, but what are the other channels? I can hear you loud and clear. Talk the wheel. Uh-oh. Okay, Adam, I don't really do the wheel strategy. No, don't get me wrong. I do it, but I only give away one trading strategy. Now, one trading strategy takes you 5 or 10 minutes. It can get you up to a 50% if you do it right. Okay, the wheel strategy where you do a cash secured put first, and then you do the covered call. Great. I'm trying. Now, I'm giving away what I taught my 9-year-old daughter, and I really, really, really stick to that. Okay, now I could teach you it, but it's going to confuse a lot of other people, and I like that being simple and safe and predictable. So the wheel strategy has just a few more moving parts. That's a great way for it. Has a little bit more moving parts from simplicity. So trying to explain to a 9-year-old about puts was not really up my line. So covered calls is the simplest and easiest for a 9-year-old to understand. And if you go back and take a look at all my videos from years ago, this is the same strategy over and over again. I like to think, okay, Adam, I like to think, if it ain't broke, don't fix it. If it's working perfectly fine, leave it alone. Okay? Like I said, I'm a lazy trader. I want to get in, I want to get out less than 5 minutes. Okay, insider. Oh, inner side. Okay, hold on. I'm going to pull back a little bit. Oh, wow. All right, hold on. These got away from me. All right, hold on. Right there. Okay. I got to pause the questions. Now, it is 10 minutes. What the hell was that? I'm not used to talking so much. You'll have to forgive me. As I was saying, I forget what I was saying. Damn it. Don't get old. It's no fun. One of the first things to go is the noodle. Yeah. All right. Anyway, let's get back on track. All right. So we're doing the 55 on Bristol Myers Squibb. So let's stick to track. Let's stick to what we're doing. Now, as I was saying earlier, I could talk about everything I know, but we wouldn't get very much done. So let's stay on track. If you really want to do the wheel strategy, let's do it another time. Not here. Here's supposed to be simple, safe, predictable, consistent, no way to lose. Okay? We're going to try to stick to that. So, covered call. Now, covered call, basically, we buy the stock first, and then we sell it to someone else for basically the exact same price we just paid for it. So, if I buy this stock tomorrow morning, I could be paying $54.98. If I pay $54.98 and I sell it for $55, you think I'm making 2 cents? No. I'm making that 2 cents on the stock, but you're forgetting about the option. Okay, remember I said simple, safe, predictable, consistent? Simple is the simplest one is just buying the stock, but there's a problem with just buying the stock. When you just buy the stock, you got to wait for the stock to move before you can get your profit. And then how do you know how long to hold on to it for what profit you're trying to get? So I eliminated all that. For my 9-year-old daughter, I eliminated all of it. Okay? Eliminated it all. You buy the stock, you sell somebody else for the same price you paid for it. So if I buy $54.98, I'm going to sell it for $55. I'm going to collect that lousy little 2 cents plus the premium from the call option. And that I'm looking to get 1%. That's my 1% per week, the call option. So the stock doesn't even have to move. It just has to be a good company. Hold on. I'm going to get to these questions. Okay? I'm going to get to the questions. Okay? I got 1, 2, 3, 4, 5, 6, 7. I got 7 screens in front of me. So I can't answer everything as soon as it comes in. You got to give me a little bit of leeway. But I will try to answer every single question before the night's over. That being said, let's do this one at 55. Remember, we're buying at $54.98. We're going to sell at 55. We're going to see what we can collect on it. So the 55 is right here. Okay, now I want to buy it, and that's right there. Okay, and I want to just buy one contract. That way it gives you an idea of what my cash outlay is going to be, and more importantly, what's my profit going to be. I'm only looking for 1%, but if I do 1% every week, that's over 50% per year. Now remember, it's called the 10-minute trader for a reason. Okay, so in 2008, my 9-year-old daughter said, "Daddy, can you teach me what you're doing?" Not exactly how it went. I tell the story on how it actually went. Because my 9-year-old says, "Daddy, can I have this? Daddy, can I have that? Daddy, can you buy me this? Daddy, can you buy me that?" So one night, she says, Daddy. I said, "Why don't you get your own job? Go out and get a job." She said, "Daddy, I'm only 9. Anyway, she said, "Can you teach me what you're doing?" So my 9-year-old daughter wanted to learn how to invest in the stock market. Most adults don't get it. So how do I teach her? Simple. All right, so here's the trade right here. That's it right there. Read it out loud. Listen to what it says. Are you ready? Buy 1, covered call, BMY, Bristol Myers Squibb. 100, that means it's the weekly options. 30 January 26, that means this option is going to expire this coming Friday. So whoever buys it has from the time they buy it until the expiration. The expiration, 30 January 26th. It's 3:59 p.m. on Friday. Okay, there are weekly options that expire 3:59 p.m. every single Friday. So I want to jump in on Monday, sell the option. I don't buy. I'm not a buyer. I am a seller. 80% of all options expire worthless. I don't want to buy them. I want to sell them. I want to be on the 80% winning side, not the 20%. No. Anyway, 55 call option against the stock, BMY at the market. Okay, max profit right there, 81.50. That's just the profit. Now I'm getting the 2 cents per share. Right? 100 shares, that's only $2. Big deal. But what I'm looking for is this right here. Maximum profit, 81.50. Well, how much is it costing me? To get a rate of return, you got to put something up. Well, the cost of this trade is 54.19. Think of it this way. I'm not buying stocks. I am creating weekly cash flowing assets. It's an asset that I can get a weekly check every single week. Let's find out the numbers. Because that probably doesn't mean anything to you, because what does that mean? Well, let's find out. For that, we need the calculator. When you're trying to figure out your rate of return, okay, your ROI, you take the profit, 81.50. Okay, put that into the calculator, 81.50, and then we divide it by the outlay. How much money do I have to pay for this thing? $5,419.16. Okay, $5,419.16. That gives me a grand total of 1.5%. See? 1.5% for 4 days. Now, had we done it this morning, maybe we would have got a 2%. Maybe. The audio is humming. Yep. Black Air, I'm sorry about that. There's 8 other channels. Okay, we had 9 channels we're streaming on this one. Sorry, something's wrong with the microphone. Sorry. But that being said, 1.5. Now, I like this one, so we're going to save this one. Now, anytime there's an issue, I do like to try to fix it. Somebody once said, James, we can't see. It's not big enough. Can you make it larger? So I said, can I make it larger? Well, of course I can make it larger. Check this out. You're going to love this. There it is right there. All right, here we go. What do you think? Is that larger or what? By one covered call, BMY, Bristol Myers Squibb. 30 January. That means the option is going to expire this coming Friday, 4 days away. The $55 call option. Remember, I'm buying it for $54.98 and I'm selling it for $55. Not a lot of profit, but $81.50 per contract. So one contract, 81 bucks. 2 contracts, what is that, 163? 4 contracts, whatever. Just multiply that by however many you get. All right. Cost of the trade, including commissions and fees, $5,419 for a 1.5% for 4 days. This coming Friday. So ask yourself, what does that come to at the end of the year? Well, you multiply that 1.5 times 52 because there are 52 weeks in the year. And guess what? That comes to 78% for 1 year. 78% if you can get 1.5% every single week. Now, I do average 1.4, but, hey, this one's 1.5. We're going to save it. We're going to save this one. What was it, 1.5? 1.5. This is what we got yesterday. 4 of them. Today, 1.5. That's the first one on the list. What else do we got? What else? Let's get rid of this. Get rid of this. Get rid of this. Get back to where we were. And let's get the next one. Who's got something good? Tell me something good. Okay. You ever do option trades on SPY or QQQ? 410 transportation. Now, I told you earlier, having an issue with my computer. I have to get another one. The brand new computer I have only has 2 USB ports. Ain't going to work, so I have to go get another brand new computer with 4 ports. QQQ and SPY are not consistently profitable. Remember, I said 2 decades. That's 20 years. So take a look at the dividends that SPY pays out. Take a look at the dividends QQQ pays out. And do they increase every single year? No, they do not. That's why neither one of those are on my list. Okay, Ovidio Castro wants to take a look at Harley Davidson. Okay. Wow, all these people joining in. Harley Davidson, let's take a gander. HOG. Harley Davidson. Ouch, look at that. Okay, so here's an opportunity for you. Okay? You're all here. The opportunity, here it is. Buy low, sell high. Guess what? Harley Davidson's been in business since 1903. That's over 123 years. Okay, we all know who Harley is. We all know what they do. Okay, the bottom of the year is now. You cannot get any lower than the bottom of the year. But here's the issue. You got to wait for it to bounce and turn around and go up. Okay, so here's the bottom. It's going to bounce, turn around, go up. Once the bottom is isolated, once you find out where the bottom is. Okay, top comes down. She went down, back up. Okay, got to wait. Got to wait for it to turn around. Don't be in a hurry. Okay, investing is not a sprint. It's a marathon. What's the stock you've kept the longest? Moses, the stock I kept the longest was Walgreens, WBA. I had it for 18 months. Now, I didn't keep it because I liked the company. I didn't keep it because I thought it was something I was going to die with. No, I kept it because it kept giving me 1%, 2%, 3% every single week for a year and a half. Imagine a year and a half, 1 to 3%